Welcome to the Master Your Millions podcast, the show all about your financial potential and leaving a legacy for future generations. Here are your hosts, Jason and Scott Henderson.
Today we have Jeff Hockett. Now, for any of our listeners that can maybe send a message once they listen to us and tell us that they know or are from the same town where Jeff was born, that's Upton, Wyoming, we'll have a prize for you. Anyway, it's a very small town in Upton. Later in life, he moved down to Arizona. He is currently married and has a son that is actually in business with you. So he's similar to Scott and I. And Jeff's forte is around the arena of helping people with tax issues like tax resolution. So welcome to the show today, Jeff.
Yeah, thank you. Great to be here with you guys.
So take a couple of minutes and kind of tell us how, a little bit about your path, how you got into this business. You've been there 30 plus years, but helping people when they have the big bad wolf coming after them, what you do for them.
Sure. So yeah, I got into this right out of high school. I've always been a numbers guy. Numbers make sense to me. It's kind of like an artist. If they're painting a picture, while they're painting it, most people don't see the picture. And when they're finished, even some people are looking at it going, I don't understand the picture. But to the artist, it was something they had in their mind and they could do it with the colors and the lines and those type things. And that's how numbers are to me. I can read the numbers and they tell me a story about a person's life, where they're at in life, what they've been doing, if they're on the right track or if they're setting themselves up for trouble. And so for many years, we just did tax preparation work. You get your W-2s, your 1099 for self-employed, you come in, we're your tax guy, prepare your tax returns, and, you pay us. And what I found through the years is that more and more people tend to make mistakes, and not even so much mistakes. They get behind on their taxes. Life happens to them, and they miss 1 year. Let's say they haven't filed 2020 tax return yet. And 2021 rolls around and they're like, oh man, I haven't even filed 2020. I don't even know where to get started. So they don't file 21 either. And the IRS, of course, is going to start sending them some nasty letters saying, hey, you haven't filed your taxes. We need your taxes done. And most people honestly don't even open those IRS letters, and it doesn't make sense to me why, if the IRS sends you a letter, you wouldn't open it. But some people don't. We've had people come into our office with, 20 to 30 envelopes from the IRS that have never even been opened. And, what usually happens is it gets so bad that if they own a business, especially, let's say they're going to make payroll. It's Friday, they're going to make a payroll, and they go in to make payroll and they find out their bank account's been cleaned out because the IRS put a levy against them. They sent them letters telling them about it. They didn't open those letters and the money's gone, and now they can't pay their employees. And so usually when someone comes to us, they're in a very, very bad situation in their life. They're pretty stressed. They don't know what to do. And so our job is to help them by getting in compliance with the IRS. A lot of us look at the IRS as the big bad wolf, but really the IRS is there to help us if they have tools that'll help everybody. And what they want is for you to be in compliance. They want you to file your tax returns and they want you to pay your taxes. They don't want to file liens and garnishments and do all the extra work on their end because, frankly, they don't have the manpower for it. So that's kind of what we do. My son, as you stated, does work for me. He still does a lot of tax preparation work. We still do that. But the resolution side is more what we're focused on, and helping people put more money in their pocket. And, our podcast is More Money in Your Pocket, and we talk about those strategies.
Love that. So real quick, tell us about a success story that you've had recently where, and kind of give us some numbers. People came in, they'd had X number of letters. I'll be honest, whenever you get a letter from the IRS, you feel nervous to open it. And I can feel for what people do that. I mean, I've never been in that situation. Recently I got one from the Internal Revenue. It's not that time of year. I shouldn't be getting it. Well, my accountant had moved his office, and so they said, oh, we're changing your address, was all the letter was. Your address has been changed in our files. And I was like, oh, right. But I can see how people feel that way. So again, will you share with us a good example of someone who got in trouble, and what you're able to do for them?
Sure. So one of the cases we just did not too long ago, we had a client come in, and they had talked to a national company out there, and had paid them, I believe, roughly $5,000 to try and get them out of the situation, and it didn't help them. And so they came to us as a last resort. And at the time, the client owed $150,000 in back taxes, and he had about 4 years of combined that he owed that money on. And so he wanted to do an offer and compromise, meaning we put together all the financial numbers and show, hey, this client can only afford to pay you, let's just say $50,000. Would you accept $50,000 and wipe the rest out? Well, the national company that he did, it came back, and they had issued a $92,000 is what they figured this gentleman could pay on the $150,000 tax bill. And so he came to our office, we ran the numbers, and while 92,000 was good for him, it wasn't great, obviously. And so we took his numbers, and what we do is a 433. It's basically just an income and expense document, but it's a 433. That's what the IRS calls it. If you've ever short sold a home, it's very similar. You're going to write down all your expenses on a monthly basis, all your income on a monthly basis. And there's things you can do. Like, this gentleman had a really old car. It was like 11 years old. So one of our advices is go buy a brand new car. Now, that may sound shady to some people. Like, why are you telling someone to go buy a car instead of paying the IRS? Well, because the IRS allows you to do that. So you can go get a car, and you can have a car payment up to about $560 and get that as a monthly bill. This guy had zero for his vehicle. So that was one of our options. And when we got done, another thing is life insurance. Something that they can buy life insurance. That's a monthly bill. That's something that they can write off on this 433. That's important to have as well. And so it's things that we look at, that how can we put more money back in your pocket versus paying the IRS? And so when we crunched all of his numbers, it came to be where we figured a reasonable installment, or a reasonable offer and compromise that the IRS would accept would have been about $45,000. So we cut it from the 90,000, whatever, that the national company did, down to a half at 45. But I wasn't happy with that, and the client's like, Jeff, that's great. 45,000 versus 150,000. I'm like, no, we can do better. And so what I did is I showed him, and a lot of people don't understand that when you file a tax return, once it's assessed, so once the taxes are assessed, you file your tax return, the IRS says you owe $150,000. Boom, it's assessed. They have 10 years to collect on that. Well, these were towards the end of that life expectancy. Like I say, the one was like halfway through already. So what I did is I looked at doing a partial installment agreement. And when we did an installment agreement for this gentleman, we could do a 36 month installment agreement at $300 a month. And so we presented that to the IRS, and we got that accepted. So he ended up paying close to $12,000 on a $150,000 tax bill that, most companies either would have stopped at the 90, or some would even stopped at the 45, and the customer would have been very happy to write 45,000 versus 150. But we broke it down even further for that customer, and saved them a buttload of money.
So you said a minute ago that, oh, this sounds shady. And some people that might be listening to this might say, well, that's kind of a ripoff. However, what we need to realize is the whole tax code, 80,000+ pages, whatever it is truly a roadmap that we need to follow to lessen our tax liability, right? When we follow the rules, our tax liability can be brought down quite a bit. And it requires someone like Jeff that's, aggressive, that knows the law, knows the regulations, that say, oh, yes, you can do this. This is actually encouraged. And one of the reasons it's a roadmap is it's them encouraging us to have a certain behavior that helps the economy, right? And that's why business owners are you have these big business owners that seem like they don't pay a whole lot of tax. Well, what are they actually generating, right? They're actually generating a lot of income for the general public. And so you need to understand that. That's a great example. Well, how about telling us a little bit about someone who came in and said, nah, I'm going to go my own way and crashed and burned. Do you have an example like that?
Yeah, we've had people come in, same thing, we quote them our fees, and we're obviously not cheap. It's going to cost you some money for us to spend a lot of time, because an offer in compromise, for example, it can take us 18 months to 24 months to get that approved. There's a lot of talking to the IRS and back and forth, and so it's not a cheap thing. And people come in, and the biggest thing we had was a lady. I travel around the country and do seminars for real estate agents. Those are my main clientele. And I did a seminar back in 2016, I believe, and a lady was in that class and she listened to it. After class, she said, I have a friend, a family member that does my taxes or whatever. And I'm like, oh, great. So she came to me last year doing her own taxes and trying to do this stuff on her own. She came to me last year in about November and said, Jeff, I have a problem. The IRS is auditing my 18, 19, 20, and 21 tax return, which immediately threw red flags up to me, because typically the IRS only audits one tax return year at a time, and especially foreign sequential. That was crazy to me. And so I said, all right, well, here's what it'll be. And she paid the fee, sent over her tax returns. And immediately upon looking at it, there was some huge mistakes in there. I mean, there things that definitely should have been on the tax return, and things she did. And it ended up costing her about $75,000 in penalties and fees,
Wow.
on top of hiring us to help her, which there was very little help I can do in an audit situation when you do your own tax return and you put in the wrong numbers. I mean, I can't defend something that's not legitimate. And so it was a very expensive lesson for her doing it on her own. And it's the same thing with these offers and compromises, or even installment agreements. I have another client who has a 2011. And the thing is, the C said on that, the collection statute for the IRS has already passed because it's 10 years. But this client went out on their own, spoke to the IRS about this 2011, which extended their statute of limitations on it. So now this client is on an installment agreement for $600 a month to pay an 1,800 or an $18,000 2011 tax bill, that had they just spoke to me first, we would have never ever brought it up because it was past the statute of limitations. So
Wow.
Wow, that's really cool. So you said that you work a lot with real estate agents. Does that also mean that you invest a lot in real estate as well?
I do. I'm an agent as well. I own a property management company, and I think owning real estate is a great vehicle, along with stocks and annuities and life insurance. I mean, I think you have to have a well-rounded spectrum of everything in your arsenal. And in order to do that, there's a lot of tax savings that come with each of those vehicles as well. So it's understanding what you're getting into when you start investing in those things, and making sure your taxes are compliant.
For sure. So out of all of those vehicles, which one has some of the best tax strategies that you know of?
So for me, I like rental properties. They're the best on your taxes. Owning stock, isn't going to do anything for you. You pay capital gains when you sell it, unless, of course, it's in a Roth. I love a Roth IRA. I think that's a great vehicle, but most people can't put much money into a Roth. So buying housing rental properties, if you do it in a self-directed IRA, you're not even paying the income on it during the year. But a lot of times rentals are negative, after you take depreciation and all the expenses. So not usually what I want it in a self-directed IRA. I would like to see it going on your tax return to help reduce your tax liability, because like I say, most of the time it's going to take a loss. And then as you're growing through life, let's say you get tired of being a landlord, there's 1031 exchanges, again, taxes that work for us to sell that rental property. And we can avoid capital gains by transferring that, exchanging it into another property. But let's say you don't want to be a landlord anymore. You can 1031 exchange into, stocks, mutual funds, hedge accounts, all kinds of different things where that money's still growing for you, and you're not being a landlord. So.
With your son, when did you first start educating him that he should start investing?
Yeah, so he started working with me. And the nice thing is, again, tax code allows us, if you have a child that's 7 years old or older, you can actually put them on your payroll. And now this year you can pay them $13,950 without them even having to file a tax return. So I just did a seminar a couple of days ago, and I had a lady in the class that had 6 of them that were above 7. So it's like, holy cow, that's like $100,000 worth of, money that she could write off, and it's money she's already spending on the kids anyway. But so I started my son when he was 7 years old, got him into the business, started teaching him things. When he graduated back in 2015, he came to me and said, Dad, I would like to partner with you and do this tax business with you. So we partnered up, and that's when he started really getting into doing taxes. So this has been his about 8th year of doing taxes and those type things. But I think having your kids work for you is a huge thing, not only for the write-off portion of it, but who else is going to educate our kids on money and how to run a business and how to do those things? And that's a conversation I have with clients all the time, because in school, in high school, they have some, maybe an accounting class or something, but really kids don't get educated on how money works. If you go talk to someone in their 20s right now and say, hey, do you reconcile your checking account? They're probably going to look at you like you're from a different country, because they have no idea what that means. They've never heard of it. And so get them involved in your business. You can write it off, but not only that, you teach them the value of money, how money works, how your business works, how to stay off the IRS's radar, those type things.
Right. So
Are there certain?
Go ahead, Scott.
Go ahead, Jason.
Go ahead.
Are there certain lessons or first lessons that you teach your kids?
Well, I think it's, when they start working for you, it's like any other employee. You have to treat them like a bona fide employee. So you got to turn in a time card. If you're going to work for me, when did you start your day? What did you do for me? And when did you end your day? And then here's some money for that. And it's just all about, a lot of us that have kids already make them do chores, right? Take out the trash, do the dishes, those type things. In business, there's lots of things they can do. If it's as simple as going into my QuickBooks and updating my QuickBooks on a daily basis, seeing where my money went and asking me about it so I can educate it on it. And, at the end of the month, let's run a P&L and explain to me how the business did this month. And, it just have that conversation, an open conversation. And same way with budgeting. I think it's just so important. And one of the things that's missing in a lot of families across America is having that open communication between spouses and children on where the money's going, what money's coming in, where we're spending it, and you teach them the value of money. It's funny because my son, he's always been pretty successful, and he makes quite a bit of money, and he used to always like to spend it. And now he's changed that. Now that he's 25, he's like, Dad, I like going into my app and seeing all this money sit in my bank account. I was going to go buy a Louis Vuitton duffel bag or whatever, and $2,000. But he's like, I like seeing that money in my account versus that. And it's just something that he learned through the years of talking about saving and putting money away versus buying every shiny object that comes around. Because in the consumers out there, commercials do that to us. It's always, you need the new car, you need the big house, you need, this new shiny object. Oh, you get a new iPhone every single year that comes out, or a new laptop or whatever. And a lot of people go buy those shiny objects. And as their income starts going up, they spend more money without even realizing it. Maybe you go out to eat once a week, and you would normally go out to, say, a Perkins or a Village Inn and drop $40 or $50 for the meal. Now all of a sudden you're going to a Black Angus or a fancy steakhouse for that night and dropping 150 to $200 because you have extra money in your bank account. It's just educating that just because the money's there, you don't have to necessarily spend it. There's better things to do with that money for the future versus today.
We've had a couple of people we've talked to that have had spouses or daughters or son, children that love to shop, like you're saying, a Louis Vuitton bag or whatever, that as they start to understand how they don't necessarily go away from that urge to shop. It's that they're now shopping for assets. They get a real big thrill out of going finding, a killer deal on a 4-plex or a 40-plex or something. And they enjoy putting money there as much as they did getting, like you're saying, a doodad or a shiny object. And that shift is fun to watch.
It really is, because now they're getting income from spending that money versus just spending on something that, is new and fancy today, but 6 months from now, it means nothing to you, And the worst part is a lot of people put those on credit cards. So they're paying for that item for the next 30 years, which again is just ridiculous to me. versus if they, I did a recent podcast on a Roth IRA. And if you put $1,000 a month into a Roth IRA in 30 years, and I don't remember the exact numbers, but it's worth like $1.5 million. And it's like, man, $1,000 a month and you could be a millionaire. It's small steps that get you there. Everybody thinks, oh, I don't have enough money to be a millionaire. I'll never be able to be a millionaire. And there's so many vehicles and so many ways to get there, and you don't have to put a lot of money into it to get there.
So that begs the question, how familiar are you on a scale from 0 to 5 with the infinite banking concept?
So with that, I would say I'm about a 3. I know enough to be dangerous probably, but not enough to be an expert for sure.
So why aren't you an expert? Are you not interested in it? You just haven't had the time to investigate it?
Just not the time. I got so many moving parts in my life, and it's a great concept. There's great things that can happen from it. It's just, I guess, not on my priority list.
Right. No, I can see that. That's many times when I talk to people about that concept, that's where they're at. They may have heard about it a couple of times. They go, oh, that's something I need to look into. Yeah, I'll do that tomorrow.
Yeah.
Then, it goes a little while. Yeah, I really got to find out about it because I like what people say in some of the sound bites. Is it real? And so we see that quite often. So, moving on, Jeff, I want to ask you 2 questions that we usually ask everybody. And the first one is, in the event you could go back and talk to your 18-year-old self, what kind of advice would you give that person? And then the next one would be, what's your next mountain you're going to climb, or what's your next goal?
Okay. So yeah, going back to being 18 years old, I would definitely tell myself the same thing I was just saying here: quit buying shiny objects and put that money into some kind of retirement funds, whether that's, rental properties, stock markets, Roth IRAs, whatever it may be. Because again, you just don't realize that the small amount each month mountains up, and especially when we're younger, everything's today. We'd rather go out and party and buy a keg of beer than to put $100 into a money market or a mutual fund or something like that. So I would definitely tell myself that, especially the older I get, closer to retirement age, it's like, man, I could have, multi-million dollars here instead of the small millions we have. And so that'd be it. And for my next mountain to climb, that's a hard one because I've reached most all the things I wanted to do in life. My goal was to basically retire when I was 45. I'm 50 right now, and I've actually, the last 8 years, I hit it when I was 42. I've do pretty much what I want to do when I want to do it. So I don't work hard anymore. I have a book coming out in a couple weeks that I worked on. I'm anxious to get that and do the podcast and just helping clients. The thing for me that I've learned in life is to not be selfish, right? There's a lot of knowledge and stuff I know, so it's helping someone else to get to their goals and watching them climb those mountains and achieve. That's so rewarding to me, and that's what I really enjoy doing. I've taken lots of people in property management, for example, and in fact, one of my good friends who's in business with me, he got into property management about 6 years ago, and he came to me and said, Jeff, can you teach me? I said, absolutely. And he goes, what will you charge me? I said, not anything. I just want to see you succeed. And so I've coached him through the years, and he's up to where he's making about $450,000 to $500,000 a year now, living the good life. And he knows how to spend his money. He knows how to save for taxes, those type things. He just has 5 rental properties now. And so just watching him grow and succeed in his business from the education and training I've given him, that's what I really enjoy out of life.
So how would be the best way for our listeners to get a hold of you? Do you have a website? Let's say they do have some tax issues, they got a mountain of letters or something. What is the best way to get in touch with you?
Absolutely. So my website is hockettax.com. It's HOCKETTAX.com. 3 T's in there. Everybody misses it, so I always have to spell it out. And my number is 623-910-2052. and we'd love to talk to you. We'd love to get them on the right tracks. So.
And everyone, to be clear, we will put those in the show notes in case you're driving along. Don't get in a wreck and attempt to write it down. And we'll put it in the show notes. You can come back and find that. And Jeff would be a good one to help you in the event you're in that situation. Scott, do you have any last words that you want to share before we give the last word to Jeff?
Nope, I don't have anything this time.
Jeff, you want any parting words you'd like to share with us?
Sure. Well, I definitely appreciate you guys bringing me on, and I definitely enjoy what you guys are doing. I think you got some great products for some great people out there, and I hope you continue to do well. We do have a podcast, More Money in Your Pocket, and a book, The Tax Strategies. So love being on here, and I appreciate you guys for bringing me on today.
Thank you.
Thanks for listening to Master Your Millions with Jason and Scott Henderson. Check the show notes for any links or contact information about today's guest. Make sure to follow the show so you don't miss any future episodes.